Now, it's 2019, which means you get to do a whole host of things that have never been able to be done before. You can order anything online, it gets delivered to your front door. You could apply for a mortgage online and get it instantaneously. You could even buy a rare piece of artwork with a credit card. I mean, this is really a truly amazing world we're living in. And the same is to be said about stocks. You can now buy stocks commission-free or with very little commission with some amazing companies out there. Some companies that I've used myself and that I highly recommend for everyone out there. I began investing when I was 15 years old. I bought my first stock, it was Apple, at the time that the financial crisis was really at its depths. Now, I found it fascinating that the world around me was so connected, and all because of stocks and all because of the companies that were going down in value, and there were some of them that were going out of business. It was really, really interesting to me, and that's how I began. And since then, I've used a bunch of different brokers online and in person, and I could tell you that today you have more options than you've ever had before. It is truly the golden age of investing. When I purchased my first stock, I actually had to call somebody and tell them I would like to purchase this stock. And they went and they purchased it on my behalf, and I had to pay them a large commission, hundreds of dollars. I mean, I was 15 years old at the time. It was a ton of money to me. Nowadays, you can buy stocks for free. You could buy mutual funds for nearly free or entirely free. And that's what I'm going to get into in this video, to detail you what the best investment platforms for buying stocks are today, because it really is the golden age of investing. Before I get into what I think are the best investment platforms of 2019, I want to tell you how I came up with that criteria, how I came up with what it means to be the best. Well, first off, I focused on only companies that deal with buying stocks. I didn't look at alternative investments like buying gold. I didn't look at buying real estate directly. I just focused on stocks, which is appropriate for most people because that's usually what they're going to be buying. I also prioritized low fees or no fees. The companies that charge you very little or nothing to purchase those stocks were the ones that I considered to be the best. I also didn't put a whole lot of weight into research analysis. A lot of times, places online will advocate and say, we have the best research available. But really, if you're looking at buying a company, you need to understand their financials, and then you can look online for a lot of free research. So to me, when I'm purchasing a company, when I'm purchasing stock, that isn't something that I really look for when I'm looking for my online broker, is a tremendous amount of research. I also really consider the ease of use, whether it's their online platform or their app that you can use, and how easy is it to actually purchase a stock? How easy is it to get approved and funded? One of the other things I looked at was reputation. I wanted to be sure that these were companies that were backed either by great venture capital firms or were around for a very long time. And that's kind of my general criteria on what I consider to be the best investment platforms of 2019. So let's get into it. First off, and I'll admit this is my number one favorite company to buy stocks or to invest with, is Vanguard. It is the absolute gold standard for mutual fund investing worldwide. They have 6 trillion with a T number of assets under management. That's how much money they have that they're managing on behalf of other people. So for people just starting out and want the most reputable company that there is, Vanguard is the number one. You cannot get better than Vanguard. So Vanguard was the pioneer in driving down fees. There's a lot of articles online that you could find with a lot of companies that are trying to badmouth Vanguard because they're eating into their profits. Jack Bogle, the founder, was keen on making sure that people paid as little as possible to get into the market. He didn't like the fact that all these bigwig, hedge fund managers were charging so much money to people just to buy into the stock market. So that's why he created Vanguard. He was a pioneer. He was the one who created the first index fund. Vanguard's index fund, which kind of mirrored the S&P 500, allowed normal investors not to try to beat the market, but to be the market. They allowed investors to buy into the stock market generally, which means that they bought into the S&P 500 is what most people are referring to, which means that they bought a little piece of 500 different companies. These are big companies you would recognize, Apple or Coca-Cola or IBM, the big companies that dominate the market. He created a tool with Vanguard, and then Vanguard grew substantially to allow people to buy into this. keen in that was low fees. So Vanguard's fee structure is incredibly low. They're a market leader on low fees. If you buy a mutual fund with them, you're going to be paying 4 basis points typically on their broader, more general index funds, which means that you're going to be paying 4 cents for every $100 you have invested. That is a tremendous deal to be able to buy into a broad range index fund, to be able to buy a little piece of all of the companies in that mutual fund. One last little thing I'd say about Vanguard is that their funds are actually owned by the investors in those funds. Now, I'm not going to get into the exact details of what that means, but suffice it to say is that they are a company that isn't going to nickel and dime you. They have an incentive to make the fees on the funds as low as possible, as opposed to some other companies which are publicly traded, like Fidelity, which they may have a fund that has 0% fees in it, but they're going to try to make money on you on the other side of things. They're going to try to get you into higher, more profitable accounts for them, as opposed to Vanguard, which has their incentives aligned for you. That's why I didn't choose Fidelity as the number one. I chose Vanguard because I can go to sleep at night knowing that every single day the people at Vanguard have me on their side. They have an incentive to make their fees as low as possible, and I'm going to benefit from that, and hopefully you will too. The second investment platform that I'd recommend is called M1 Finance. It's a relatively newcomer on the block, but it's a tech-focused, venture capital-backed, highly reputable company that really brings a lot to the table that I think is really worth checking out. Some of the key things why M1 Finance is such a great investment platform for buying stocks is because, first off, they have no fees of any kind, no account maintenance fees, no commissions for buying stocks. So you don't have to call some guy and pay him a lot of money like I did way back when. You get to buy stocks for free. That is a remarkable thing. You can invest in it. It's very similar to Robinhood, but I'm going to tell you why it's a little better than Robinhood as well. So first off, M1 Finance, when you purchase, you can actually purchase fractional shares of ownership. Now, what does that mean? It means that when you go and you buy stock, you don't actually have to buy the entire share. You can buy a little piece of that share. So that's significant with companies that have extremely high share prices, like Amazon, for example, or Google, or even Apple. I mean, those are a couple $100s for Apple, close to $2,000 for Amazon, $1,500 for Google. If you don't want to buy one entire share, you just want to get a little piece of it, you can buy a fractional share up to 1/10,000th of a share price, which for all intents and purposes is going to be sufficient for you. The reason why fractional share ownership is so important is because when you're buying a piece of a company, you don't want to be overweighted in that one company. If you only have, for example, $2,000 to invest, but you want to own a little bit of Amazon, but you don't want to put all of your eggs in one basket, all of your eggs in Amazon, you can buy a fractional share. Now, if you're using another company like Robinhood, which does not allow fractional share ownership, you would have to purchase one entire share of Amazon if you wanted to buy a piece of Amazon. If you're buying with M1 Finance, if you're using them as your broker, you're able to purchase a little piece of Amazon. So maybe you only want to purchase $200 of Amazon. So that's, if you had $2,000, that's 10% of the amount that you want invested, and you can invest the rest of it. Maybe another 10% of your $2,000 you can invest in Apple. You can put a little bit in Coca-Cola, a little in McDonald's, whatever it is. You can get more diversification, which is kind of the crucial key element for a successful portfolio. You don't want all of your eggs in one basket. Any number of things can happen where a company can fall off a cliff. For example, with Amazon, maybe Alibaba or some other company, from China or elsewhere comes along and creates a better form to buy goods and services online, and Amazon in 5 years' time becomes much less valuable than it is today. You really never know. There are any number of things that can happen. There's a great chart which indicates that any number of these companies can become more or less valuable over time. The companies that are the most valuable today aren't the same ones that were the most valuable 20 years ago. M1 Finance also has some great tools for automatic investing, similar to Vanguard, where you can set up a periodic sweep of your money from your bank account into a number of funds with M1 Finance to purchase, whether that's individual stocks or tailored funds that you created, or they have these really cool things, what they call them pies, and they're custom made by their experts, so to speak, where you can peel through them and see, okay, I kind of like the construction of that different pie. I like the way that they're investing. I'm going to invest a little bit in that. It's almost like a mutual fund like Vanguard, except that it's more specifically tailored to different sectors or different lifestyles that you want to have with your investments. Now, in comparison to Vanguard, M1 Finance is not owned by the shareholders of the funds. They're owned by private individuals and companies. So the question is, how do they actually make money if they're charging me no money for account maintenance fees, no money for buying stocks, no commissions at all? That's kind of the natural question that most people have. And the simple answer is that they make money from premium services, and they also make money from something called payment for order flow. It's a very kind of esoteric form of how a market works, but essentially they route the shares that you are purchasing, your purchase orders, to a different group, and they pay them money for those routed orders. And so the next buyer, the third party, will actually make some money because they understand that a group of people are going to be purchasing a certain amount of stocks, and there's really a lot of shadiness about it. But for all intents and purposes, the difference between what you would pay with M1 Finance on a bid-ask spread versus some other group that has a tighter bid-ask spread is going to be immaterial for most individual investors. The high-level overview is that it is essentially free. You're paying for maybe an additional 1/4 of a cent on those bid-ask spreads for the typical purchase of your stocks. Now, there's a lot of kind of grayness in those areas, and if you're a big institution, your pension fund, you wouldn't want to use them. But because you're an individual investor, you're not going to be investing billions of dollars. It will be immaterial to you, and it really isn't something you should be concerned about. It is, in effect, something that a lot of companies do, like Fidelity, like Robinhood. They all do the exact same thing, and really it's kind of the cost of free. One other thing I mentioned about M1 Finance is they have these really cool algorithms which tailor your tax burden in the most efficient way possible. What I mean by that is if you're looking to sell some stocks, it'll actually pick the ones that you have losses on to sell them, so you don't incur a liability from tax. If you sell a stock and it goes up in value, you have to pay capital gains tax, whether it's short or long term. And what they do is they prioritize the ones that you actually lost money on when you sell them. If you're looking to sell just broadly, that way you don't owe any taxes. It's kind of a cool thing for people if you're looking to buy and sell stocks and you want to do it the most efficient way possible. You don't really have to think very much about it. M1 Finance's cool algorithm really tailors it for you in the best way possible. The third company I'd like to talk about is called SoFi Invest. Now, I've talked about SoFi in my previous videos, and they're a really good company. They're highly reputable, they're backed by venture capital firms, and they processed billions and billions of student loan refinances. Now, the reason SoFi made this list is because, number one, they're reputable. Number two, their fees are great. They have no fees of any kind, no account maintenance fees, no fees to purchase and buy stocks. And they also have places where you can put your money, where you can earn a lot of money. I talk about that in one of my videos as well, the SoFi Money account, and why I think that's a really good place to store your money as well if you're not investing it. Now, the main reason it made this list is because it has a lot of cool learning tools for people just starting out. SoFi Invest is one of those brokers that you can really get comfortable with if you're just starting out. They have a lot of articles which teach you how to invest. They teach you about the world of investing. They teach you all the little things you might not know if you're just starting out about personal finance. It's a really good guide if you're really just starting out and you're just beginning in the world of investing. So SoFi Invest is definitely worth checking out. Definitely one of the best ones of 2019 for those reasons. The fourth company that I like to mention is called Interactive Brokers. Now, it's a lot different than the ones I mentioned previously because it's a lot more geared to people who are a little bit more intermediate or more experienced in investing than the traditional person might be. So Interactive Brokers is an online platform which has been around for a very long time, and they offer really, really good and flexible terms on a whole host of products, not just stocks, but they offer great rates on options and other things as well. You can access international markets with Interactive Brokers. It's a great tool. It's something I found out about a long time ago when I was in an investment club back in undergraduate school. A lot of people were using Interactive Brokers to buy and sell a lot of large orders of things. They're using it to buy a lot of options and do things that aren't traditional and aren't going to be necessary for a lot of people to learn about or to have when they're using M1 Finance, Robinhood, or other firms like that. So if you're an investor and you're looking for something that has a lot of flexibility, a lot more product line, and still have really cheap fees, especially on volume discounts, Interactive Brokers is still one of the best things that you could check out in 2019. Now, those are the top 4 that I'd recommend for 2019. If I missed any, please comment below, let me know, because There's a lot of things that are coming out. The world is changing all the time, but the golden age of investing is now. No longer is it the case you have to call a broker like I used to and have to pay them hundreds of dollars in eating into your profit margins. You can trade for free or nearly free with a whole lot of great companies out there. I highly recommend that you just begin now with any one of these companies or a company similar to it. Avoid fees like the plague. You don't want to be stuck with an Edward Jones or any of those other companies that are going to charge you an arm and a leg. There's no reason to do so. You're purchasing the same stock as you would using another broker, so you might as well use the best out there. Now, I got this video idea from somebody who commented and subscribed, so just a shout out to you for that. Now, if there's anything else that anyone else would like to see, any other topics, please let me know. I'm always making new videos like this. Don't forget to subscribe and like this video, and I'll see you next time. Thanks.